Looking ahead to the trading week beginning July 4th, you just heard me say it, 4th of July, Independence Day in the U.S., so U.S. markets are closed. We're coming off of a week where the equities have resumed their downtrend, down 4 of the last 5 weeks now. In the Dow, the S&P, the NASDAQ, and the Russell actually tested the resistance of its 200-week moving average and failed against it. Equities have their worst half of the year, their worst first half of the year since 1970. That worst half ended on Thursday of this past week. Now, as we go into next week, yields are going to be in focus in a big way. Yields fell dramatically this week, with the 2-year yield falling 23 basis points, 5-year falling 29, 10-year falling 24, and 30-year falling 15 basis points in yield. The yield curve steepened, with the 2s 30 steepening by 7, 5s 30 steepening by 15, and the 5s 10s coming out of their inversion. They are no longer inverted across the curve. A bunch of durations, 2-year, 5-year, and 10-year, all below 3%. That hasn't happened in quite some time. And now next week, we've got the FOMC minutes on Wednesday. So that's going to be a big deal in light of the yield moves we're seeing. With the weak economic data that we had last week and a couple of the prior pieces of data as well, the markets are starting to say that the Fed doesn't necessarily have to be as aggressive as they have stated that they will be. We may get to decipher some of that when we see these Fed minutes and get some insight into what they were actually thinking as to whether yields or moves in the equity and moves in the yield market will actually affect that decision. Now, data coming this week. I mentioned that Monday the markets are closed in the US, but in Canada we have manufacturing PMI, and that evening China's Cation Composite and Services PMI. Tuesday, German and Euro area services PMI, building permits in Canada, and factory orders in the U.S. Wednesday, Euro area retail sales, a 10-year German Bund auction, which could be interesting, a bunch of S&P global PMI figures, including those with Germany, the UK, and the U.S., and then those FOMC minutes that I mentioned. Thursday, we get Japan's coincident index, U.S. ADP employment figures, along with the weekly jobless claims number. Then on Friday, Canadian employment figures and the U.S. non-farm payrolls for last month, which are expected at about 265,000 jobs added and an unemployment rate that is unchanged at 3.6%. Important to note, late Friday, we also get Chinese inflation data.